Today I want to take a closer look at your favorite semiconductor company, and that is Intel. I actually want to take a closer look at 3 reasons why I wouldn't buy the stock right now. And later on this week, I'm actually going to do a video on 3 reasons why I would buy the stock right now. I think for any form of investments, it's always important to see both the bearish side and the bullish side of any company. And while there are many bearish points for Intel, we're going to take a closer look at 3 reasons here. There are also numerous bullish points to be interested in the company. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So first, let's just take a closer look at Intel. Right now, it finished the day at $30.65. It is super close to its 52-week low of $30.05. We can see from its 52-week high, the stock is down roughly 45.27%. We can see at the moment dividend yield of roughly 4.76%. The real question is, will it be able to keep that dividend yield as it kind of expands to numerous markets? So my first bearish point is how expensive this push to the foundry business service really is. I mean, if we take a closer look at this company's financials, we can see free cash flow quarterly has been deteriorating over time, and in this most recent quarter, it was actually negative $6.4 billion. We can also see a huge hit in cash and short-term investments, and this company does have a nice amount of debt. Obviously, the foundry business is a very expensive one, and it's one that me as an American, I'm super excited to have some of these products back here in the United States for numerous reasons. I do want to say, as a company, it's still very expensive, and Intel depends a lot on things like the CHIPS Act to be able to push this into effect. Not only that, most recently on August 5th of 2022, this company did announce about $6 billion in senior notes to kind of increase its overall cash position. Not only did they have to raise debt, but they're also looking for partnerships to kind of reduce the amount of money they have to put up. For example, in mid-August, they did announce a partnership with Brookfield, which they will be investing X amount of money to help build some of these new factory plants here in the States. And at the end of the day, even with all this money being spent with government acts and with the kind of partnerships that they're working, it doesn't necessarily mean they are going to be successful. So my first bearish point is this is a very expensive market to enter. Obviously, they can be successful, and that could obviously be a good win for the company. But not only do they have huge competitors in this space, the overall kind of market of manufacturing advanced node technology is one that needs to keep having money reinvested into itself. So not only is it expensive to start this market, but it's also expensive to maintain a lead in this space. If you are liking the video so far, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Also, if you want to learn about the semiconductor market, make sure to check out my newsletter. The link is down below. The second bearish point is one that I believe many Intel investors are kind of annoyed with the company, and that is numerous delays. For example, in their most recent earnings call, they did mention that for their DCA market, the data center market, they are seeing a delay in their Sapphire Rapids server processor, which is unfortunate, but it's not the first time. Not only that, this year was also supposed to be a big year for Intel and their kind of graphics processor solutions, and unfortunately right now that has also been hit with numerous delays. Alder Lake, their consumer CPU market, which is already released, was also one that had numerous delays on it as well. And if you just go to Google and put Intel delays, you will see all the different platforms and all the different years that this company continues to push back some of its products due to delays. And unfortunately, this is something that has become normal for the company, and if I was an investor, something I wouldn't really be too happy about. The third reason is the overall competition in the company's main products. For example, we can see in Intel's most recent earnings report, they do mention that their data center market was down a nice amount. One of the reasons being was competitive pressure. Here in this article from WCCF Tech, we see a little bit more about AMD's market share and how it is growing over time. The data was collected via Mercury Research, and we can first overall see AMD's mobility CPU market has grown dramatically. In quarter 2 of 2022, it's roughly 24.8 compared to a year ago where it was roughly 20%. The AMD server market share is also up to 13.9% in quarter 2 of 2022, where a year ago was less than 9.5%, and 2 years ago it was roughly 5.8%. So this is a market that has grown dramatically over time, and it just shows that Intel definitely has some competitive pressure behind it. Its biggest competitor, AMD, is going to be releasing a new consumer processor, the AMD Ryzen 7000 series, and they're also going to be releasing new data center solutions, for example Genoa, later this year. Like I mentioned before, Intel's server CPU right now is delayed a bit for full volume production, and their consumer processor, Raptor Lake, which is the next one that's expected to be released, will be released a few weeks after AMD. Not only that, in the upcoming year, NVIDIA is also releasing a CPU for the data center market, which will create even more competitive pressure for a company like Intel. So these are 3 of the reasons why I wouldn't buy Intel. Again, these are more of my bearish points, but I also have bullish points for this company that I will be sharing on a later video.